I would say APAC is very different. We have very different cycle as compared to the global, players. Because global, I think there's a lot of US banks that had trouble. But if you look at APAC, especially for emerging Asia, we're at a very different cycle. China is actually reducing, the interest rates. And then Indonesia and India, there was some tightening, and now you see more liquidity in the market. So I don't really feel like our opportunity set in terms of private credit has been impacted by the banks, like appetite. It's more about, I think we are more like supplemental capital to private equity and public issuances, because we see less private equity activities nowadays, especially across China. And the India private equity valuations start to come down, especially around this year. So we see more opportunities as private credit investors as a supplement to private equity. Again, I think that's another, I would say, differences between APAC and especially emerging Asia versus to US. Yes, the interest rate has, basically hiked across some of the Asia countries like India, and then you see a minor increase in Indonesia as well. China, of course, is the other way around. It's a contraction. I would say the good thing is that for most of the Asia corporates who used to borrow from private credit investors, they're very much used to the high interest rate environment. Because I think I get one of the questions people ask me, hey, why Asia you don't price your deals based on floating rates? Why do you price your deal based on fixed rate? I think we normally tend to have a target return for each of the country we have exposure to. And then the target return can ranges from anywhere like low double digit to even high double digit. Nowadays, mostly around the mid-teens range. So the interest rate hike doesn't really impact us as such for the emerging Asia. But in the meantime, when we underwrite, we do take into account, the sustainability and then also the interest obligation for the corporates who borrow from us. And that hasn't changed in terms of underwriting, methodologies. Sure. I think the challenges is exactly what you mentioned. Like our US counterparts and European counterparts has enjoyed the rate hike. So their return, premium, and then also versus to our return premium, historically, a lot of investors allocated into APAC, they are looking for the return premium against our counterparts, right? But then the return premium has tightened mainly because they have enjoyed that, rate hike, and then we have been quite steady along the way. So for us, we see the biggest challenge is how to basically convince our investors that why Asia remains very interesting. That comes with the opportunity set. So I think the opportunity set is that Asia private credit is still very nascent. So the growth room for this product, I think, is very significant. For a lot of investors looking to invest in Asia, they have growing assets and then also longer term, obligations, liabilities to pay out. So allocating into Asia as a diversification to the existing portfolio from US and Europe and generate potential, longer term return and also benefit from the longer term growth. I think that's probably one of the key, considerations investor would take into account.